think of, mainly because it's counterintuitive to what you would imagine. So we'll cover all of that today.
You're using my word. No, I'm just kidding.
Hey, I learned from the master.
Maybe that was your word and I was using it. I don't know.
It's all good. It's all good. All right. I think we're going to get started here. Julie, we're going to do well, it's recorded. Okay. All right. Well, we get formally started, Cliff.
All right. Well, again, welcome everybody that is joining us today for another Ihara Team webinar. This one is selling in uncertain times. Well, uncertain times being COVID, you know, these are just, it's been a rough year since around March, and there has been a lot of updates and adjustments with what's been going on. And if you are here, you are wondering how it affects you as either a buyer, seller, or investor in real estate. And we're here to help you with any answers that we can possibly provide. So let's jump right in, Dan. The presenters for today, you see myself on the right-hand side. My name is Kaleo Fong. I am the chief negotiator for the Ihara team. I negotiate all of the listing contracts. So when the contracts come in, when the offers come in, they come to me and I help to weigh the options, do our due diligence as far as the buyers, their background, their lenders, and just make sure that you have the best price and terms available, and then walk you all the way through to closing. Next to me is Mr. Dan Ihara himself, the famous Dan Ihara. He's been in real estate for over 15 years now, one of the top agents in the state, and our team leader. Dan, anything you want to mention about yourself?
Well, I want to go back to you. How long have you been doing this? I mean, how many transactions have you helped close, Colette?
Oh my gosh, I don't know. So I've been on the team just about 3 years and going on maybe 200, 250?
Probably closer to 250, my guess. Yeah.
Something like that, yeah.
Yeah, 250 closed transactions. Kaleo is very humble and very modest, but he's helped shepherd our clients all the way to the finish line, highly successfully at doing so. He's also a licensed attorney. He's acting on behalf of our clients as a realtor, but he's got the background regarding the how laws will impact our client. And that's been extremely helpful for many of our clients. So yeah, I just wanted to lift Kaleo up because he's done a fabulous job for all of our clients. And you'll see, if you look at any of our reviews, his name always pops up. Man, nobody even thinks about me.
Oh, thanks, Dan. So what we're covering today, of course, how is COVID impacting real estate? That's, of course, a big one. As we break it down, what are buyers' perspectives and buyers' opportunities in the market? What, on the alternative, what are sellers' perspectives and opportunities? Keep going. Is my
I think your internet's a little bitchy there.
Technology and safety best practices in the pandemic, and what strategies shall I consider? So
well,
again,
let's dive right in then, Kaleo, right? So how is COVID impacting real estate? Well, what's happened, right, Kaleo? There's a lot of uncertainty in the market, right? People aren't sure what's going to happen. We don't know how long it's going to last, and it's had a massive impact to our economy, mainly through jobs, right? When you go down to Waikiki, you look, and those hotels have been shut down for months, right? The sales teams have been let go. And whenever the corporate, these large organizations say, you know, we don't need the sales team, that's a bad sign because they don't see daylight, right? They don't see where they're going to try to bring large groups in. And so we believe that this is going to take a while. How long? it's going to take a while, meaning a couple years, before we
Yeah.
can even get back to a portion of the percentage that we were enjoying prior to COVID. We used to have, what, 30,000 people a day. Now it's, what, 2, right, at
Yep.
best. So, this is it's gonna be a while. We're all hopeful that it doesn't last that long, but all of the indicators that we're seeing in the economy, and there's a lot of polls out there regarding the willingness of people to travel, right? Well, there's a large percentage of people just aren't going to do it. It's not worth the risk. And then there's a lot of folks that are now working from home.
Yeah, Dan, I think on one hand you have the COVID, literally COVID, and how long it's going to take until we get the vaccines, right,
Right.
and distributed. But on the other hand, it's another thing to think about how long the impact will have an effect on our economy and jobs and the market, which will we're guessing or not guessing, it's pretty positive that it's going to have a much longer lasting effect, right?
Yeah,
So we could be.
They say that after the vaccine is distributed, which will take a while, it'll still take about 2 years for people to embrace it enough to be able to consider getting in an airplane again and staying in another hotel room that some other people were staying in,
Mhm.
right? So, unfortunately, for our island and our market and our state, as well as areas like Las Vegas, right, they're extremely hit hard. For all the travel destinations, that's going to be a challenge. On the local level, as you know, that people are really concerned about their health and safety. Kaleo has a young child, and for the first few months, Remy never really saw anybody, right? Because you can't expose the child; it's too high of a risk.
Yep. Still, we're worried. So.
Yeah.
Yep. It's personal, right? It's pretty personal.
Exactly, and that's what's happening everywhere for not only the young but the old. Right? And so those two high risk demographics, they're really concerned about health and safety. The other thing that's happened is, we all work from home now, and many of us still haven't gone back to an office. Well, what's going to happen is we believe that people won't go back to the office in many cases, because we've learned to live independent of a brick and mortar office, and we learn to live virtually, right? As you see in my background, this is my office. Kaleo has a much nicer background. He's over in San Francisco, virtually.
Yeah. This is where I live. I just, I'm overlooking the Golden Gate.
That's his background. But yeah, I mean, we all are getting used to it. Honestly, for us, I don't think we will go back to an office. I mean, why would you do that? Why would you have the expense? So what we're going to start seeing is, you can see a lot of commercial fallout. We've already started seeing some of it. We'll see it in the retail segments. We'll see it in the office segment. And we're going to see it in the restaurant segment. We're going to see a lot of fallout that's going to start trickling down to the others around it. And then lastly, it's just the living environment. Many folks now are considering opportunities of moving into a single family home versus a condo, because one, the condo space is small. Two, there's higher risk for contamination going in and out of elevators, waiting for the elevators. I mean, I know we go into condos all the time because we sell a lot of them, and you can only have 2 people in the elevator. Well, you might have to be waiting a while until you get an empty elevator, right? And so all these factors are what we're hearing from people in the population as to, we're starting to see more drive to higher demand in single family dwellings versus condos. And the data supports that, where sales in the condos are slowing down a bit. And single family homes it's so competitive now. There's such high demand for it. Some of that's just because, people want to consolidate. Or they just want to get out of the high contamination environment. So what are buyers thinking? Well, buyers are saying, well, we've got really good interest rates now. Maybe now's the time to buy myself something. Now, these are the folks that obviously have jobs, right? So There was a statistic that went out a while ago that 30% unemployment. I think it's a little better now, but let's just say it is 30%. What that says is there's 70% of the population that is employed. Well, these folks that have solid job, maybe essential workers, they're looking at their lifestyle, and they're also looking at their environment, but then they're also looking at the interest rates and how that's going to help them, because they'll be able to buy more with that. Now, what they're finding though when they hit the market is there's a limited number of homes on the market. The inventory is extremely low at this time. What that does is it forces them to have to compete, right? And many of our clients are really having to compete for things and paying more than the last sale, so to speak. And then a lot of folks now, what's really great, the benefit of COVID is we've all become more digital. We're all more virtual. So now we can search digitally on our cell phone, on our iPad. But what they're doing is you're seeing more videos, right? And we, on our team, every single one of our properties have videos of a walkthrough. And the number 5 was they want to find a place to stay at home. Right? There are some folks that are actually selling a single family home to buy another single family home because the one that they're looking at is they're not that comfortable staying at home that long. Keep in mind, we've been doing this for what, 7, 8 months now, right? Yeah, it's about 7 or 8 months that we've had to stay home. Well, a lot of us are not that happy with where we're at. And so that's why they're thinking of other places to stay at home at. And many folks are looking for a bigger, safer environment, something that they can enjoy. We've had people that wanted another room for an office, or maybe a gym. Some are looking for a swimming pool because if they're going to stay home, they want to enjoy time there if they can't get out and about. So all these things are showing up in buyers' mind, and it's having an impact on them, right?
I'll tell you, Dan, even I was looking for a bigger place, right? If I'm going to be working from home, oh my gosh, I don't want to be cramped up, especially because interest rates are so low. Oh my gosh, I think everybody's just looking just to look, Yeah, there's
100%. And as you mentioned, the interest rates really allow people to buy more, right?
Mhm.
So the reason why that shows up is, at under 3%, I think it's back to 3% now, but it was down to as low as 2.65. It was really low. And we don't know what's going to happen to the interest rates. We believe it'll stay relatively low, but at some point, as the economy rebounds, interest rates will rise. It's inevitable. It will have to rise at some point. But for I would guess the next 12 months or so, we expect interest rates to stay fairly low. And what allows them to buy more, right? Your monthly payment is what they're looking at, and you're going to be able to buy a bigger property with the same monthly payment. It's also faster to search and shop today than it was 5 or 10 years ago, right? You can get into homes virtually. You can see them faster. You can see them whenever you want to. The virtual walkthroughs and the virtual open houses now, people are now looking online and going to virtual open houses now because they want to narrow down the search before they actually walk into somebody else's home, walk into an environment that may be contaminated, where they may put them in a health risk. Because anybody that's has compromised immune systems or health challenges, they're definitely going to think twice of just, I see an open house, let's go drive in, right? Those days are not there anymore, right? People are more sensitive. Well, and rightfully so. Rightfully so.
Yeah. Well, and it's convenient, right?
Yeah.
People are just walking through homes from the comfort of their couch, right? Before you would look at pictures but not necessarily know the layout. You would always tell a buyer to go to the house in person before making an offer. But recently, I would say we've seen a number of offers being made sight unseen.
Yes.
And from the mainland too,
Yes.
a lot more. So it's just an interesting time where you don't really say that anymore.
Yeah. Somebody asked in the chat, are there better neighborhoods than others on the single family home market? It's amazing how busy it is in areas where we didn't think it was going to be busy. Areas like Kapolei and Eva Beach. I mean, that market was predominantly fairly slow, and we have listings there that we got $30,000-$40,000 over the list price.
Yeah.
Mililani too, right?
Mm-hmm.
And mainly because there's just a lack of inventory. Right? You go all the way to East Oahu where we are, there's some markets that have a little bit more inventory than others. But for example, we had one in Manoa, we had multiple offers on, and sold very quickly. So, I think the highly desirable markets that were desirable prior to COVID are still desirable. And there's other pockets that have now become more desirable because of a lack of inventory.
I would also add that, the sweet spot for single family homes has always been between like 750 to 950, a million.
Yeah.
And now, because interest rates are so low and people are qualifying for more money, there are more people in that sweet spot.
Yes.
Right. So there's more competition, and less inventory means there's way more offers being made on the same few homes.
Yes.
So when you have a property, and what we've seen, if you have a listing in this area, we're getting tons of offers driving the price over asking. So again, you're to your point where it's that counterintuitive nature of the market right now, where you would think that, oh, maybe the market's not so good, but what we're finding out is that the market is surprisingly good for sellers.
Yeah, we're busier than we were prior to COVID.
Yeah.
We have more people calling us about selling their homes and buying homes than we had prior to COVID. And we've been blessed with a good business with that. At the same time, both sides have their challenges, right?
Mm-hmm.
And we're able to walk them through that.
Mm-hmm. We have a quick question here from Frank and Lee. Well, they have a couple of comments here. Observation on people in condos seeking out single family homes is true. Also, the aspect of working from home causing people to want a larger home, like my brother. Okay. So they do have the same experience. Sellers are receiving multiple offers from buyers, but in the attempt to be the primary buyer, folks are putting in a quick offer, but also canceling escrow. How can you avoid this as a seller? Good question.
It's Paul Kaleo.
Yeah, a couple of ways to go about this, right? One, you have to start out pricing strong, right? If you price competitively and you get multiple offers, that's going to start you off with the best situation and give you the most leverage. Now, when you negotiate the contract terms, one of the things you want to make sure is that they know, what the type of property is that they're buying, that they're very motivated, right? And you call the buyers, the agents, their lenders, make sure that they're motivated. They're not the type of people who are putting offers on a whole bunch of different properties and don't really care whether or not they get it, or are the type to just cancel as if something small comes up. But a couple other things you can put into the contract, like especially if you have competition, is a non-refundable deposit. That's something to put even more leverage on your side, and it's actually a real consequence to a buyer, right? You lose actual money if you're going to cancel. Now, not every buyer is going to do that, but if there's enough competition and they're motivated enough, then they will, especially if it's a single family home in that sweet spot again.
Yeah, I think, Cleo, you're really good at doing the due diligence with the buyer's agent and the lender, right? I think providing that information to our seller allows them to make good decisions about the best offer, mm-hmm. right? Finding motivation really matters, right?
Yeah.
For one person who's throwing in multiple offers in different places, has never seen the place, versus the young couple that's going to have a baby, mom lives down the street, highly motivated. So it really depends on the buyer's motivation that mm-hmm. will determine, what's the likelihood of it sticking together. The other side is the lending side, right? How strong are they financially? What's their financial ability to close on it? If there's a little shaky there, then we'll flush that out. We have a number of series of questions we ask, and we'll have better confidence as to, will this person actually be able to get to the goal line for you? So
Right. So the goal up front is to eliminate as many possibilities of a buyer canceling as possible, right? And you go with the offer that you feel is most secure, you know, gives you the best price and terms, but is also secure. And that's where that due diligence comes in.
we also have a whole series, and I won't talk too much about it. We have a whole series of things that we know how buyers can cancel, and we front load those services for our sellers so that their ability to cancel is a shorter window of opportunity. So we hedge our odds on the ability of that buyer to cancel because we're proactively getting in front of it. But that's a whole different class. So we'll talk about that another time. All right.
Yeah.
So
why are some people buying? Historically low interest rates. We gotta drive that point home. Historically low interest rate.
yeah, and that's the real outcome. My buyers are looking at the numbers, they get it, and they're all hitting the market now, right? And if they're renting, then you're paying somebody else's rent, right? So if you're renting, like we had a guy that was paying like I think $3,000 a rent, but he figured, well, I can get a mortgage and pay that $3,000. You may as well pay it to yourself. Build equity for yourself in the long run. And then you also have a tax benefit as well for those who are not don't have the tax deduction. And then we also have some folks moving to the islands. We just had a whole series of the military coming through because they come over in the summer, and that's why the demand was so high out in Ella Beach, Kapolei, and Lilani, because that's where the bases are. But we also are getting transplants from the Bay Area. And this is something that's fairly new to us, right? Because all those tech companies in the Bay Area, but also all the way up the coast, right? They're now allowing their employees to work virtually. And what they're doing is they're now saying, many of them are coming back home, right? They went to school in the mainland. They had a good job. Some of them work for Google or these large companies. Now those companies are saying, we'll let you live wherever you want and work wherever you want under these guidelines. And so we had 3 people recently, actually 4, that are buying here, mainly because it's safer here. With COVID and all the high-risk areas out there in the country, the racial divide, that's horrible in some cases, in some areas. It's dangerous, it's not safe. And then the fires, right? And all those folks up in the Northern California, my gosh, it's just horrible to see. And some of those folks are saying, enough is enough. I'm going to go live somewhere else.
Man, those fires are so crazy. I feel like it's every year. Every year, we hear about all these thousands and thousands of acres in California. I'm surprised people still live in California.
Well, you know what I heard? So one of our friends, his place burned down, unfortunately. But what we're hearing is a lot of these communities out in those areas, they can't get insurance anymore.
Yeah.
Which means that they just dropped all the values. They can't sell it because nobody's going to buy it because you can't get insurance, right? So that's going to have a negative trickle-down effect as well. But we are seeing a lot more people moving here just because we're able to work remotely. Then obviously the military is coming in, right? They're always transferring over. Then we see a lot of young families. Families that are, they have good jobs and they have children, new ones, kind of like Remy, right? And looking for bigger places. We're starting to see a lot of that. And then we also see investors. Some of these investors, they're having different perspectives of it as well now. But some of them are opting in. Some are actually opting out also. So we see both sides of that, the investor market. Here's the impact of the low interest rates and what happens. And right now, today, it's much lower than this. But this is, for example, if the rate was 4% today and it did go up just 1%, what would happen is if you want to keep the payments the same, which is usually everybody's goal, right? The buyer's goal is to keep the payments the same. That's what I can afford. Well, then you lose 11% of buying power. Just a 1% rise of interest rate negatively impacts your ability to buy by 11%. That's significant. I mean, in the case of this, $500,000 property, you lose $55,000 of buying power. You can no longer buy that $500,000 place. You have to only buy up to 445, right? And that's what's going to happen as the interest rates rise. Now, fortunately, interest rates are really good. That's why the demand is high. But our guess is at some point it will rise. And when it does, that's going to even have a greater downward pressure on pricing because there'll be less buyers out there as well. So those are things that will happen in time. I think we're okay for 2020, 2021. We don't know what's going to happen though. And another wild card is who our next president will be, right? Because there's talk about some folks believing that if one of the parties gets into power, then a lot of the tax benefits might be disappearing on us. So, you know, these are things that are going to be impacting us all as we move forward, even after October. Now, the sellers have a different perspective. The sellers are saying, well, no, they're concerned about the uncertainty of the market. And actually, many folks believe, as we do, values will decrease over the near term. Now, long term, it'll always rise back up. But we're going to show you a chart in a few minutes that shows you how the cycles of real estate goes. But because of the downward pressure on the economy due to unemployment, due to we're going to lose a large portion of our restaurants, many of our retail outlets will be gone. It's going to have an impact, and it will trickle down to the real estate market. It will trickle down to some areas and values. What we see also is that some of our investor clients are now selling because they're concerned about their tenants paying rent. Right? Some of them aren't paying rent. Some of them are asked for some grace in some areas. And that's going to be a challenge for many investors. The biggest challenge will be for the investors who have a mortgage. If you don't have a mortgage, it doesn't impact you as much. But if you have a big mortgage and you're counting on that tenant to pay your rent month after month, then these investors are going to go in a hole, right? And it'll be a negative investment, which is going to be a problem. What we're going to also see is you're going to see more foreclosures and short sales. We're starting to see the signs of them now. We have a few right now that we're going through that are now coming to the surface. We expect those short sales and foreclosures to rise over the next 12 to 24 months as we move from a recession to a depression. For folks who aren't able to make their payments and are struggling, are really financially struggling. And there are some sellers, though, that are really, they just don't want people in their house, right? Even some tenants, they don't want people in their house. And rightfully so, if they're, have compromised immune systems or health challenges, yeah, you can't blame them, right? I mean, I would certainly be concerned. Well, that's some of the sellers out there that they want a different solution. They want a way that we can sell the home without having so many people in their unit. And we have a bit of a solution for that also. We'll share at the end. And then also, when you have a slow economy, that just means it'll slow down the real estate market over time. Now, I would say the rest of this year is going to be pretty busy. The next few months. I don't know what next year is going to bring us. And we don't know the impact of the election as well.
Mm-hmm. Yeah. We have a quick question, Dan, from Frank and Lee. What is the lowest interest rate you've seen these days on any recent transactions you've done? What's the lowest you've seen?
The lowest I saw was 2.25.
VA?
Like VA loan. That was one day.
Yeah.
It went down to that, and I could not believe that. That buyer got extremely lucky because it didn't last more than a few hours.
Yeah.
Literally.
Yeah.
VA loans, believe it or not, you can get even a lower interest rate than a conventional mortgage with zero down. So the VA loan option, we're seeing more and more folks using it because basically they can buy a home with no money. How can you buy a home with no money and that large of an asset and to have extremely low interest rate, right? It's a great benefit for our military, and I'm really happy for them. They deserve it. Honestly, they deserve it. What was it? Oh, we're at another side. So what are the opportunities for the seller? Well, the lower inventory means stronger demand and more competition. Low interest rates obviously get more people to the market. We are now seeing a greater desirability of Hawaii for folks, in particular for folks on the mainland. We even had a few people that are buying here sight unseen now. We actually have a partner on Maui. They have a client that bought a $2.7 million oceanfront property sight unseen because they're just tired of where they are, and they'll come here and get there when they get here, that type of thing. There's a higher interest now because they believe it's a much safer environment, which I believe it is. We're getting a lot of multiple offers, right, Cleo, on our single family dwellings?
Oh yeah.
Almost every one, right?
Oh, everyone. If it's a single family home and at a decent price, you're getting 3, 4, 5. The last one in, let's see, in Mililani, single family home, listed at a decent price. We got 16 offers.
16 offers.
16 offers. That's a lot to go through.
Yeah, I know.
Yeah. Oh
And
man.
the sad part is there's 15 families that were unsuccessful. So
Yeah.
what do you think they're going to do next time when another property comes up? They're going to go bid higher, right? And they're going to be stronger. And they get there faster because there's people that are tired of losing, right? Which is really driving demand.
So I think low inventory or low interest rates are putting a lot of people in the market, right? There's a lot of people looking, but the low inventory means they're all competing for the small number of properties, right? So it's both an increased amount of people in the market and less supply. And it's just creating a frenzy for the listings that come up. It's unbelievable.
Yeah, we're again counterintuitive, right? We didn't when we got into COVID, we didn't think this was going to show up like this. We never expected that, right? Somebody asked, how long will this last? That's a really, really good question. I think it'll last a while as long as the interest rates stay low and inventory stays low. Right? What's going to happen though over time, we believe, is that given the increase in, let me back up a little. And I don't know if we have a slide on this, I can't recall. So people who can't pay their mortgage, right, they're given an option from the bank. It's called forbearance. So the forbearance program says you don't have to pay me for the next 6 months. Literally, you don't pay a mortgage payment at all for 6 months, right? At the end of the 6 months, the bank's going to give you an option. The options are either pay me all back, all the money that you owe me, which how likely is that going to happen, right? Because they couldn't pay each month. How are they going to pay every 6 months? 2 would be, okay, we're going to take all that money due to us and we're going to roll it into we're going to let you pay it off within 2 years. Or they're going to take all the money that you owe that you didn't pay, and they're going to re-amortize the entire loan and start another loan on it. What we think is going to happen is people are, if in December through probably March, because that's where they're going to start hitting the market, when these forbearance programs end, some people are going to opt out. Some people, the Akamai people are saying, there's no light at the end of the tunnel. I don't want to damage my credit. I better try to get out as soon as you can. And that's when they're going to hit the market. You're going to start selling them. Some of them, unfortunately, are going to owe more than it's worth. That's called a short sale. And some have defaulted on their loan. Therefore, the bank took over. And we are starting to see the signs of it today. But I think it'll start really showing itself probably in the first quarter of 2021 as more and more of these forbearance programs are expiring. Right? And now buyers and the sellers are going to have to make a decision. What do I do? How do I handle the mortgage? And if airplanes still don't get here and hotels don't get full, which I doubt it will, that's unfortunately going to show up with a larger number of inventory listings, which will then slow down the values, right? Because there's more options then. There's more options for buyers. Therefore, the demand is reduced. So some are saying, you know what, I want to sell now before we start seeing the full impact of the economic downturn. Those are the Akamai guys that understand where we're going to go. They know that we've hit the peak of the market, we've passed it, and it's going to take a while for our economy to recover. And those are the folks that are calling in droves nowadays to help them make a transition. So why are some selling? Well, when they can't or shouldn't live in their home. And these are our older adults who have a health incident show up, or somebody passed away, and their home doesn't fit them anymore. So we have a lot of those folks. That's our model of helping our kupuna transition to another home, a safer home, maybe a retirement community or a care home or another family member's home. We're getting a lot of folks that have been named as a trustee. Mom and dad passed away. The trustee has to liquidate the asset, and they're trying to figure out how to do that. Because we actually have a class called I'm a Trustee, Now What? If you want to see that, go to our website or our Facebook page. You'll be able to see that class, which is very valuable for anybody who's going to be the successor trustee or who is one. And they're having to deal with the assets, having to deal with the management and liquidation of things. A lot of folks are downsizing, right? They're taking their large home. We have a number of clients that have a multiple unit, multiple story home. They want to get that single level home. They're downsizing, making things a little simpler and easier for them. Then we've got the young ones that are upsizing, right? And, they have more children. That's a phenomenon that's going to start showing up soon. Probably towards the end of the year, early of next also, is what COVID did is they made us stay together. Well, those that, there may be an increase in maternity ward visits, so to speak, with upsizing growth of families, right, over time. We're alone together. Oh, never mind, get your head out of there. Anyway, but you know what I mean, right? That could happen.
Yeah.
And there's a lot of people who believe that they will. There's a lot of families that are consolidating, right? They know that mom and dad's health isn't that good, so maybe we're going to take care of them, so they're consolidating. Or a child lost their job and now they can't pay rent, so they're moving back home into the family home. So we see a lot of families coming together now because it's a safer environment to be in. And some are selling because they have to pay for care, right? Some of them they need care, they can't stay in their home, and they have to pay for their care, which could be fairly expensive. Unfortunately, we're seeing a number of divorces that are coming to the table that we're having to help also. And I'm told from divorce attorneys that this is going to be, there'll be a rise in it in the next 6 to 12 months. We're spending a lot of time with each other, maybe more than we would normally, right? Husband and wife, they used to go leave the house in the morning, come back at night, and everything's fine, right? But now they're in the home all day together, right? And incompatibility could show up, and unfortunately, the divorce attorneys are telling us that this will likely be a rise of reasons why people are going to be selling.
I think you're either going to get a rise in the maternity ward visits or a rise in the divorce. One of the two.
Right. And hopefully not both, right? But, honestly, think about it. What's going to happen in the future is pretty easy to see, right? And what happens when people stay together so long and they're not used to doing that? We don't know how long we're going to have to do this, right? Hopefully, in a couple of weeks, we'll be free to roam around and travel, but I don't know if it's going to go away that quickly. Some are also relocating, right? They're relocating. Some are coming back here. Some are leaving here to get relocated with family. What we're finding is actually some are leaving Hawaii because of the cost of living. Right? It's too expensive. We have a client now that's selling the house, and then one of their children are buying a home in Colorado where it's a lot less expensive. If you look around, the average price of a home in the United States is probably like $250, $275 for a pretty nice house. And here, you can't get anything in town under $1 million. It makes it appealing for folks to unfortunately, to relocate. Some of that's due to jobs as well, right? If they were in the service industry here and they get a different kind of career somewhere else, yeah, they may be moving. And we're seeing all of these things show up now. This is a list of basically our client base of hundreds of people that have raised their hands saying, you know what, I think it's time for me to move on. And some just need cash, right? They don't have jobs, they've got bills to pay, and they're just cashing out. Some are just selling and renting, just because they know that, you know, financially that's probably the best option for them. So here's an interesting chart about the law of supply and demand. Think about it. Right now we have low inventory, and we have steady demand. So what happened is our competition increased over the last probably month to 2 months. What that did is it allowed the seller to sell faster at probably a higher price. Now, what happens when the low inventory is still here and the demand rises? Well, when the demand rises, you're going to have increased competition and increased prices. And that's what we started to see is prices started to rise in certain areas. The last one we sold in Neva Beach, we're the highest sale in that area. And the prices, the last 6 months of data does not support the price that we sold it at. But we were able to close it, and the client's extremely happy. Then you have a rising inventory. So what happens when the forbearance program started expiring, you see more short sales and foreclosures, people now selling because they, you know, either any of those reasons, divorce, marriage, whatever it is, you see a rise of inventory and the demand stays the same. What we're going to see is we're going to see lower prices because there's greater options for buyers. It'll take them longer to sell as well. And then the worst is when you have a rising inventory and a low demand. What happens when the interest rates rise, because they will, that's going to reduce demand from a buyer's perspective, right? So you have a rising inventory, and then you get a low demand, your prices will drop even faster. Or it may not even sell. It may not sell at the price that you want to sell it, which could be problematic. When we looked at the low end of the market in the condo market, that's where it started. We started seeing the low demand and rising inventory show up, and also had a strong downward pressure on pricing. Right? So the prices got less. They're smaller. They're less than that. We have clients now that are having to sell less than they did a year or two ago. And these are just facts that are showing up that we're sharing, that what we believe is going to happen is over time, yeah, the inventory will rise. And if the interest rates rise too, that's going to reduce demand. And then we're going to be in the last bullet, which is going to be unfortunate.
And we have a really good, interesting, but really good question from Frank and Lee again. Given the competitive environment of the market, if someone is planning to buy a home contingent on the sale of their own home, would you have them sell their home first rather than making an offer with a contingency plan?
Yeah, the answer is yes. Because again, if you're going in, let's say there's 3 or 4 offers next to you on a property that's highly desirable because that's why you like it. It's desirable to you. And you say, well, I want to buy it, but I got to sell that. Well, you're going to be in the bottom of the pile, right? I mean, the seller's going to look at the least friction, the easiest one to sell, the one with the most motivation, and the one that can sell faster without any contingencies. So to answer your question, yeah, I would strongly recommend selling first in order to buy.
Yeah, so I would completely reiterate that thought, that if I had 2 offers in front of me, I'm presenting to a seller, right? They're the exact same offer, but one of them has the contingency. I would go with the one without the contingency 100% every single time, right? That means it's added risk, right? Because if they were to fall out of the sale on the property that they're selling, then they cannot purchase your property.
Right.
And so that's, you know, not something you want to get into willingly when you have a better alternative in hand, right? So unfortunately, in these competitive situations, we see these And honestly, they're just not as competitive, right, with that type of contingency.
Now, what we've done in the past, and we do a lot of 1031 exchanges, right? So what we've done in the past is we'll say, hey, we'll sell our home, price it well, attract it well, get multiple offers, and say, I'm willing to sell once I find my replacement property, right? And so you tie up the buyer because the buyer is willing to wait a little while because they really want the property and they know it's competitive and there's not much else out there, so they're willing to wait a little while. So you're saying to the buyer, the one that you're selling, that you'll sell to this buyer once you find a replacement property. Now, once you find a replacement property, you can sell to that, say to that seller, hey, I already have a buyer, I'm already in escrow. Yes, it's contingent on me closing, though he's already in escrow, and here's how motivated they are. Again, that's another step in the middle for those who are doing a 1031 exchange or doing a sell buy. The easiest route to get you what you want is to sell first, though, before you buy. So this chart shows you what's happened to the median sale prices back to 1987. The blue line is single-family homes. The red line is condominiums. You can see it kind of mimics each other, but you can see that in 1991 we peaked out in the market. Imagine in 87, the median sale price being, what was it, 168, and then it goes up to 380 just in a matter of 4 years. Huge growth. This is when the Japanese came in and started outbidding each other in cash. But what happened after the peak? Look how steep it dropped. But more importantly, look what happened in the long term. After this peak, it took 14 years to get back to the same values. So people say, well, no, I'm going to hold on. I'll sell later. Later might be 14 years to get to the same value, right? Because this is what happened. It took a bit of a slide. Now, from 2000 to 2007, we saw the largest creation of wealth in real estate. Right? This was an enormous growth of 10% a year of values. But again, what happened after the peak of 2007? We saw a decline. This cycle years to recover. So 2014, it took 7 years to get back to the same values. Should you have sold it, timed it perfectly, right, at the peak? Well, how do you know if you're hitting the peak? The only way to know is after it passes you, right? That's the only way to know. So what happened now? This rise here was the largest expansion of capital appreciation we've ever seen. This was over 10 years of growth. But what happened in January, I believe it was January 2019, is where we saw the first decline in values. And then we see it trickling up and down, right? The last month's data showed it went up, right? Because it's a median sell price, right? And again, supply and demand. But what's going to happen is that's going to take a dip. If you follow cycles, this one being 14 years, this one being 7 years, I don't know what the next cycle is going to bring us. Some think that it'll be a quick rebound. Many think that it's not going to be a quick rebound because it'll take a good amount of time for not only our local economy, our national economy, our global economy to get back into health as it was prior to COVID, barring any other health incident that shows up between now and then. So yeah, we believe that time's not our friend typically, right, in this kind of market. If you're thinking of selling, I plan on holding on for 10 years or more, or really start considering getting it on the market. So, yep. But the rising inventory is due to the pandemic because of, like I said earlier, the expiration of the mortgage forbearance programs. We're going to see the first sign of that probably December, right? It'll start showing up in December, and you're going to see more and more of those coming to an expiration. And then the increase of foreclosures and short sales. The other thing that's impacting our market is it's illegal now to evict a tenant that has not paid you for the last 5 months. And if you have a mortgage, you can't remove this person. So apparently that law, to my understanding, goes until the end of this year, 2020. What we don't know is if they're going to extend that law. Now, if our economy doesn't improve, what do you think is going to happen? Well, they're likely going to extend it. What's going to happen? I don't know. I don't have a crystal ball on that, but a lot of people believe that may continue for a bit. The government bailout will be there because there'll be pressure by our society to support everyone. And the problem is though, if you have a mortgage, that's problematic. And then we also look at family and safety and lifestyle that we're starting to see. The consolidation of families is greater now than it did prior to COVID because of safety, because of the economy, things like that. So what we've done over the since COVID is we had to find a way to harness technology and provide safer best practices during this pandemic. And we know that we had to employ some really strict health and safety protocols in everything we do in our environment that we work in. We are essential, which means we're out in public with clients. We always have to wear a mask, sanitize our hands and things like that. But we'll take you through a little journey of how we go about doing that. We want to harness technology to sell your home and just make it easy and convenient for you, the seller. So this chart on the left is, these are posters at 11 by 17 size that are in all our open houses. The one on the left basically says, hey, we take your health and safety as important as it is ours, and we want you to read that. So they read that, and these are mandatory. They have to comply to this, otherwise they're not going to enter the home. Okay. Then we ask them to pull out their cell phone. We have a QR code in the middle. They click on that, and it goes to a health declaration. So we're asking them for all of their information before they enter our clients' homes, because we want to protect our client as well as our team, as well as other visitors that are coming. Basically, we want to do our part to protect our community from COVID. And we take it very seriously. So they click on that, and then also we have signs that say, right now we can only have 5 people in the house. So with the agent, that's only 4 of the guests. And we still ask them to keep their mask on, to stay 6 feet apart. We also sanitize their hands before they enter and before they leave. So when they click on the QR code, it goes to a health declaration. We're requiring them to give us all of their contact information, as well as all the names of the people that are joining them in this visit. And then they're asked questions that are standard for COVID. Have you traveled outside the state in the last 14 days? Have you been in contact with anybody that tested positive? If you're feeling well, please come back on a different day. And so we take this extremely serious, and it allowed us to stay safe. This has allowed our clients to feel confident that we're doing everything we can to protect them as well as our community.
So far, 100% safe.
So far, 100% safe. We keep praying that continues, right? Yep. I really believe that our team takes this extremely seriously, because it is serious. I mean, there are some people out there joking, but this is not a joking matter. We really need to be serious and safe, because anybody can get sick, and we don't know who that's going to be. So the other thing we had to do is harness technology. Prior to COVID, we did the photos and the drones and the private showings and the digital signatures, and we did property searches. Yeah, that was all before COVID. But what happened when COVID hit is we couldn't have open houses. So we did an agent-guided virtual tour, where an agent actually walked you through a home, explaining everything that you're looking at, right? And that really helps them to narrow down their search, makes it more efficient for the buyer. It reduces risk, so we don't have as many people in their homes and waiting in line to get in. Obviously, the health declaration that we have, and that's really for contact tracing too. Should somebody contact saying, hey, I came to your open house and I'm now tested positive, we know who to contact everybody there. And we're going to do our part to minimize this issue. And what it also does is they have to be qualified buyer, meaning they're going to have to be pre-approved for that private showing. Right? We're doing virtual open houses now, right? Because some people are okay going to open houses because we can do public ones today. There was a time that we could not do public open houses, right? And we had to do only virtual. So because we found that when we started doing public open houses, people still wanted the virtual version of it, we do our virtual open houses as well as the public ones, right? And then we also have the touchless open house system with the QR code. They don't have to sign in. They don't have to touch a piece of paper. All they have to do is touch their own phone, right? So it's what we call a touchless open house. And right now, we do a lot of Zoom meetings with our clients. We'll go to the house when we need to go to the house. But right now, most people appreciate having Zoom meetings or FaceTime meetings. We also have a mobile app that allows people to search homes on their phone. And then obviously online seminars, just as we're doing today. So again, everything that our team has done, we take it to the highest level that it's possible because we really care. We really care about making sure everyone stays safe and allow them to reach their goals. So these are examples of our virtual open houses and our agent tours. Feel free to go visit our site. You can take a look at them, see what they look like. We also have recorded webinars. So all of these webinars are recorded, and you feel free to go back, and if you have questions about anything, it's a good place to find information. Or you can just reach out to us. We have a big Facebook program also. We've got Facebook and Twitter and Instagram. All we ask is if you thought that this was important or helpful, please go to our Facebook page, please follow us, please like us, please share this information, because our goal is to educate the population on best practices of handling and helping folks buy and sell real estate. Oh, and Carrie mentioned, yeah, our website is iharateam.kw.com. Thanks, Carrie. And that's what it says right here, iharateam.kw.com. You can click on our virtual showings, our featured listings, our webinar schedules. We encourage you and also share that with your friends. So many of you might think, well, how can this be easy and convenient? We did make it simple. Right? It's just a simple 5-step process. When we meet with our clients, we just basically understand your situation, what your goals are. We want to identify what those challenges that you anticipate having. What could prevent you from reaching your goal? And we want to be able to be there to solve those problems. We've helped close over 1,100 transactions, so we have a lot of challenges that we've seen in our career, and we also understand there's many ways to solve them. Okay. What we want to do is clarify what your goals are and then kind of share some options with you, right? Because this is completely your plan. These are customized strategy sessions that are really designed around you, not us. And it's really not, it may not even be about buying or selling real estate. It could be meaning about how you manage your estate. It could be how to handle the trust. It could be a lot of different things that we could help with. And then once we create those options available, you get to choose which route you go. And then we create a plan. Right? We put a timetable on it and pull the team together. Then we execute on that strategy. So we'll do this every day, all day, if needed, to be able to help folks reach their goals. Yeah, so if you want to take that number down, you can just call that number there or reach out to clientcare@iharateam.com, and we'll be happy to set up an appointment for you that's private. We could do it by Zoom, we could do it in person. Really is up to you how you want to do that. But what we can tell you, it'll be private and confidential, and the conversation is going to be about you, right? Not about us. It'll be about what's important to you and how do we help you reach your goals. So in closing up, the Ihara team, we started 15 years ago. When I started in real estate, my wife joined me the year after, and we built a large team. We were one of the largest realtors in the state. We closed last year 154 families, helped them reach their goals. We also built a company called High Property Management. It's a property management firm designed because a lot of our clients said, hey, I want to invest, or I have investment properties and I need help. I don't want to manage it anymore. So we serve our client base in that sense. We started Stage Hawaii because we knew that staging was really important. If people are looking on their cell phone and their iPads and their computers, they're looking at pictures, right? They're looking at videos. Well, we want to make sure those pictures and videos look as best as possible. But the problem was staging was so expensive. And so what we said is, well, what if we could do staging for our clients at a lower price. And that's what we did. So because we own the furniture and the items in there, we can do it at a discounted price relative to the market. 10 years ago, we started a company called Senior Move Managers and Declutter Hawaii. Senior Move Managers was designed because we had a lot of our seniors moving into retirement communities, selling their home, moving into a retirement community. But their biggest challenge was their stuff, right? Personal items in their home, not sure how to make the move. They didn't move in the last 50 years. They don't know how to do it or when to do it or what to do. And we've helped, gosh, I think over 1,000 families as of now move into either a retirement community, a care home, move into a family zone, or move to the mainland. And then Silver Spoons is a nonprofit designed to help our kupuna who cannot help themselves. And we take the profits from these for-profit businesses and we fund Silver Spoons so that the folks that need help get the help. Because if it wasn't for an organization like this, they wouldn't be able to pay for it. We fund it ourselves and help people in need. So we have a number of upcoming webinars. We have Building Wealth through a 1031 exchange. If you know somebody with an investment property and they're thinking of trying to build wealth, we've got great strategies for them to help them even create a legacy with their families' assets. We have another one called Strategies for Buying in Uncertain Times. These are detailed strategies of how we help buyers compete in the market. How do we help them through these uncertain times? On the 22nd, we'll do one called Senior Living Options. If you know any family member, anybody who has a family member that's older looking for what their options are. Where can I go? How much does it cost? What does it life look like? We're going to explain all the options here in the islands. And this is a class that we've done for, gosh, over a decade that we've been serving our senior market, as well as working with all the retirement communities in the state. And then on the 24th, we have 10 things you want to know before you buy. Real simple 1-hour class to say, these are the top 10 things you really want to know before you buy a home in Hawaii. And lastly, this is our amazing agents. We actually have a few more there, but we're going to put in there. But our mission is really to honor God by serving others with the highest level of competency, care, and compassion with uncompromising integrity. All right. And now I'd like to ask if you have any questions, anything that we didn't cover that you want to know, anything you want it repeated. Thanks, Frank.
Yeah, anything at all. Who else is still on here?
Anybody in Facebook? I think that's going live on Facebook. Any questions? Good. Good. Well, again, if you believe that this is helpful, if you found value in it, please do us a favor. Go to our Facebook page and please share this seminar and let your friends know that there's information that's available. There's no cost to this information. And we're really here to help people change their life. One of our missions is really changing lives through what we do. And it's been a pleasure and honor to share with you today. Feel free to reach out to us. My number's right there. You've got the number for our team. If you have a question or a need, please reach out to us. We'd love to support you and answer any question you have.
All right. Well, thank you, everybody. Great job, Dan. That was an awesome seminar. Thank you guys for attending, Frank and Lee, Kay Tengon, and let's see, Kevin. Thank you, guys. If you do have any other questions, feel free to reach out to us, and hopefully you can attend another one of our webinars. Remember, the consultations are free. You know, I think the first step is one, understanding your situation, and two, knowing what your options are, right? And so feel free to schedule an appointment with us.
Yeah. Absolutely.
All right.
Thanks, Cleo. It's fun. I guess now we got to
Yeah,
get back to work, right?
I guess so.
Yeah. Thanks, everybody. We really appreciate your attendance. And again, please share if you like that. Thanks so much. Aloha.
Thank you.